So here's the question: with the institutions involved at the level they're involved now, will they allow it to go below 30,000, and can it go below 30,000? Is that their floor?
Yeah, that's a great question. So the ones that are getting involved probably don't want it to go lower than that if they're buying in this range. The question I would have is that, if you look back in previous periods of major deleveraging, whether it's 2008 and 9 or 99, 2000, 2001, did the institutions get what they wanted? Oftentimes you could say that, especially like look at the bank stocks in 2008 and 2009. I mean, you had some of these stocks trading at $3 in these big banks per share, like Bank of America. And I would dare say that, the deleveraging event will even influence or affect them to the point where it'll probably drive it lower. And that could actually be a negative for Bitcoin, where if you start to get these key breaks on the technical side, it actually could create institutional selling where they're saying, okay, listen, this is going to go down to 20 or 18 or wherever. We need to unload at 28 or 29. And that could actually be a catalyst to the downside. So I would say in general, the institutions, they are smarter than average investors. They can kind of ignore emotion more, but they still have levels of risk tolerance that they have to abide by, right?
Yeah, yeah, exactly. And we are seeing, some of them dip their toes in. We know that we're still probably a year or more away from really broad scale institutional adoption because of the regulatory environment and other issues of compliance that they have to navigate internally. What do you think ETFs and more broad scale institutional involvement does to the price action? Is that exponentially, exponential growth there, or do you think there's a limit to the upside? What do you see that doing to it?
I mean, I do think that when you really get full adoption by, if you think about the amount of money pension funds hold and institutions across various hedge funds and just on books of corporations and stuff. I mean, if you really got to that point, Bitcoin is likely at 500,000. Now, again, I don't think that that's going to happen in the near term. It's slowly happening, but until you get, and this is kind of counterintuitive, but everyone's always like, oh, the regulation is going to be so bad for Bitcoin and everything. I'm in the opposite camp. If you look at other asset classes, if you want the big money to get in, you need to have regulations, you need to have rules so that they know what to follow. Think about marijuana stocks, right? So marijuana stocks, for the most part, federally not legal, so a lot of institutions aren't able to get involved, and banks can't get involved in them in a lot of ways as well, and that really is holding those stocks back. So I think regulation is a good thing longer term. It's scary initially because you don't know, how much is the government going to regulate. We always hear regulation being such a negative thing, but if you want adoption of Bitcoin, you need to have standardized rules that institutions and trillion-dollar pension funds can hold on to.
Yeah, they can't even get involved until that's instituted, and we have regulations and we have laws. And for everybody watching, one thing to remember is there's a lot of things on the table right now because they want to get it going. And it's kind of like Palo Alto, right? Go fast, break things. Legislation can be the same way. There's a lot of risk for individuals in this environment right now. It's an emerging technology, it's a new investment vehicle. There's a lot of assets being promoted that are really securities. They really are, and they're not being regulated at all. So they want to get in from a consumer protection standpoint. I know a lot of people don't agree with that, don't believe it, or whatever. But one of the things to look at is opportunity zone legislation. So the new Tax Jobs Act, where they had the opportunity zone legislation where you could shelter a capital gain, was the same way. They put this thing into effect, and there were a lot of questions about it and a lot of issues that didn't line up. Unintended consequences of good, intentions. So even if a bill gets passed and there's things in there that are prohibitive and unintended consequences of good intentions, they will clear that up, put forward guidance, and then they'll change those things. So I know there's a lot of people saying, well, all I am is a miner, and if I have to adhere to all this stuff, it's going to kill my business. Well, then we'll make exclusions and exceptions for people in those industries once it's passed and people start lobbying and they see the hurdles that it's creating that are not what they really intended. So once they pass it, what I'm saying is once they pass something, that's not what you're stuck with forever and ever more. They will amend it, they will make exceptions, and they will, get more reasonable about it as it
Yeah,
goes along.
and you're 100% right on that in regards to, so ever since China cracked down on mining and so forth in China, Texas has become an absolute huge spot for it, right? So now all of a sudden you're going to have Texas lobbying to make sure that, the crackdown and the rules aren't too stringent. So, you do want rules and regulations, but like you're saying, is there will be a back and forth to make sure that it still can be a part going forward. And that's really what you want. It certainly is a potentially very interesting situation here on Bitcoin. Bitcoin has now gone above this key trend line. So again, just to rehash, we had the big drop from, basically 65,000, the all-time highs, down to 30,000. And then we've basically been range trading for the last 3-4 months, right? And today you can see it's starting to move above. Now the one thing I would just caution people about here is that a move above is good, but it doesn't confirm a breakout, right? So generally what I want to see is in the next trading day or so, a secondary close higher than the high of today's candle. So today's high right now is at 43,280. So I'd like to see a close back above that in the next couple days before it closes back below the lines. Now you might say, that seems like so complicated. Why do we have to do that? Well, the bottom line is the institutions are playing with Bitcoin investors, right? We saw it on the way down. Over here, you pierced it. Everyone thought it was breaking down. And then what do? They ripped it right back up. Over here, we closed a day below 30,000, just like we might close above this trend line today. What do? They ripped it all the way back up. So generally, I go on the more cautious side and say it's a promising potential breakout here, but let's see if it confirms so we really know for sure. Now, if it confirms, you likely head up to this gap fill here, which is right around, let me give you an exact, right around 49,500. Maybe it touches 50,000. That would be your next resistance point on the chart.
So I know several people are calling for a bull trap all the way up to 50,000. So do you think if we get up to that point, we're okay and we're off to the races, or do you think we need to confirm above 50 before you feel like the trend has reversed?
Yeah, I'm kind of in the camp of a potential bull trap, and I hate to be like that because long term I'm very, very bullish on Bitcoin. But I do think that whenever you get gaps in the chart, there's this kind of almost magnetic draw to fill those gaps. And there's a big gap here, right, from here to here. And that ultimately should lead to Bitcoin moving back up here a little bit back to that level. Once it gets there, that's your next resistance point. Now, if it gets above there, then I do think we test, if it really establishes itself above 50,000 for multiple days in a row, then I do think you have a shot at the all-time highs. But right now I'm in the camp that if you do break here, you go to that 48, 50,000 level, then likely you'll see a deleveraging event in the markets that will influence Bitcoin and cause deleveraging in Bitcoin and cryptos, and you'll see it flush down to, hate to say it, but 18 to 20,000 area. If you ask me where Bitcoin is in 10 years, probably 100,000 or more. But you have to see these drawdowns. You have to flush out the money. I know people think that the move down to 30,000 was a flush out. It honestly didn't flush it out to the point where, if you look at the market, the stock market in 2009 at the lows, I mean, there was literally people just giving up on looking at their portfolios. It was so nasty. You haven't gotten to that point on Bitcoin. And I think it's important to remember that on a normal basis, Bitcoin corrects 85% very regularly. I mean, if you look historically at Bitcoin. And so you have to expect that, 85% would actually put it a lot lower than 20,000. But I think, again, the 18 to 20,000 would be a likely target before it starts really just charging higher to those higher levels.
Yeah, I'd have to agree with that. I know a lot of people personally that have been waiting to get back into the 40,000 plus range to sell that would not sell at 30. They were like, well, if it's down here, I'm just going to ride it down and back up. But if it gets back above 40, I'm selling. That maybe they were in at 30 to 50 and they want to get out in that 30 to 50 range, but they didn't. But they would ride it out below 30, which was interesting. And that didn't get tested, so we don't know how low ultimately they would have ridden that down. Now, here's another question. We do know the institutions are involved. I've been showing a lot of price action lately on videos I'm making where Bitcoin, Ethereum, until lately, and several of the large caps look identical. I'm talking exact price action, same moves, same amounts on the same days at the same times across like 20 or 30 different assets, probably more if you dig into it.